G'day everyone, it's Chris Carlin here, masteryourmoneynow.com.au, helping you take control of your finances from the comfort of your own home. I just want to thank you for taking the time to opt in to receive this case study on how teachers can buy their first home in the next 12 months. I know for a lot of you think that's completely out of reach, that own your own home in 12 months is not possible. I'm here to show you some ways that we can make this happen for you. So look, your time is precious, I understand that, but we've got a lot of content to get through, so let's get cracking on it. So firstly, we're going to discuss, what is the 3 steps to a financial plan or any other successful plan. There's 3 steps involved with that. We're going to go through that today. We're also going to talk about what teachers are doing and not doing in order to purchase their first home, okay? Because there's some teachers that are doing this really well, and then there are other teachers who are not. So let's reveal some secrets there. And then we're going to discuss your next move. How can you implement what we've discussed in this session? So this video, we're probably going to take about 45 minutes. So take some notes, remove any distractions, turn off the TV, your mobile, Facebook, whatever. Feel free to stop and start this video as well. If there's some content here that you didn't grasp the first time, please stop and start the video, because we've got a lot of stuff to cover, okay? So make sure you take plenty of notes. Disclaimer, I've got to show you this by law, so just confirming that the information presented in this session is general in nature. I don't know you. Hopefully that will change in the future, but I don't know you and your specific circumstances. So it's only when I not have a grasp of your complete situation that I can present to you formal, personalized financial advice. Okay? So before we get into it, maybe I'll just spend a couple of moments talking about who I am. So that's me on the screen there. My name is Chris Carlin. I'm the founder of Master Your Money Now. I'm a certified financial planner and mortgage broker. And I'm passionate about helping everyday teachers with their finances, particularly those aged around 25 to 35 years old. Both of my parents were teachers, so I understand the stress and what teachers go through on a regular basis. I've got a lot of friends who are teachers and a lot of clients who are teachers. I understand, anyone who sees the teaching is just a 9 to 3 job and you get 11 weeks off a year, are kidding themselves. They don't get it what it's like to be a teacher. They don't see the lesson plans, the report writing, the paperwork, the extra meetings and everything else that you've got to do in order to be a teacher. But I get that. Like I said, I've certainly experienced that. And so, and what I find with teachers is that they don't have the time to invest in themselves. They're so busy investing in others and our next generation. They don't have the time to invest in themselves, including with their finances, to ensure that after looking after and investing in their children for the next 5, 10, 20, 50 years, that they've got something financially to show for their hard work and effort, which is why I set up Master Your Money Now. I've been in financial planning for nearly 8 years now, but done a various range of jobs there. I was born in a place called Hawkesdale, which has got the grand population of 80, so I'm a country boy at heart. Now living in Geelong, home of the Mighty Cats. So, and if you're not in Geelong, whilst probably half of my clients, half of members of Master Your Money Now are based in Geelong, I've got clients right across Australia, everywhere from Hobart to Rockhampton and everywhere in between. So I'm used to dealing with clients via video technology. And so if you're not in Geelong, that's okay. We can still help you. We'll talk you through how that process works in the future. And I'm married to a Kiwi nurse. We've been married since October 2018. Okay, so that's a little background on me. So who is Master Your Money Now? Like I said, I founded Master Your Money Now in July 2018 because I wanted to help everyday people, teachers, nurses, tradies, small business owners, take control of their finances from the comfort of their own home. You don't need to come into an office to get financial advice. We've got technology. If your friends and family are on Facebook, why isn't your financial planner? That was a question that I always ask. And I really wanted to make sure that this is for everyday people, particularly those in the 25 to 35 year old. I didn't want to set out a company that just helped the rich get even richer, and charging exorbitant fees that only the top 1% can afford. I wanted to make sure that you, as a teacher, starting out your career, that you are able to access financial advice that enables you to buy your own home in the next 12 months, amongst other things as well, which we'll go through as part of this video. Because we want to be a comprehensive one-stop shop for all of your finance needs. So we can do the super, the insurances, the mortgage broking, the budgeting. We want to do that all through Master Your Money Now, okay? We are backed by a company called InFocus. Now, I know a lot of you listening to this would never have heard of InFocus before, and that's okay. They are a large financial planning group that looks after about 160 advisors Australia-wide. The reason I bring them to your attention for two reasons. Firstly, whilst you will only see me and deal with me primarily, there's a team in the background that's looking over my shoulder, making sure that I'm doing all the right things by you, my members, and making sure that everything I do is in your best interest, okay? So whilst you'll only see me, there's a team behind me that hopefully you'll never have to see that do support me to ensure that you get the best services and advice possible. And the second thing I'll point out about InFocus is that it's not backed by a super fund, insurance company, or bank, okay? They're not backed by any sort of product or institution. Therefore, when we talk about setting up your super or insurances as an example, we can look at the full suite of options out there available for you, okay? So there are a lot of companies, a lot of financial planners are backed by a Big Four bank or AMP or IOOF. That's a big six. So we're not. We look at the whole suite of options there for you, okay? And like I said, most of our members, 40% of our members are under the age of 30 and 70% of our members are under the age of 40. We help though, we don't help, we can help those, who are approaching retirement, but our bread and butter, our ideal client is a teacher or a nurse who are aged between 25 and 35 years old, who are just starting out their career, building their wealth, and wanting to save for their first home in the next 12 months, okay? So enough about me, let's talk about you. Let's talk about how we can help you to save for your first home in the next 12 months. There are three keys to a successful financial plan. The first one is, where are you now? The second one is, where do you want to be? And the third one is, how do we get you from point A to point B? Okay? That's the three keys to a plan or any successful plan. It sounds simple, but it's amazing how people screw that up. A lot of people in particular barely know where they are now financially. They don't know if they're in a good position or a bad position or what's going on. So we sort that out. But even more people don't have a clue where they want to be in 1 year, 2 years, 3 years, 5 years time. So that's what we help people with. And then once we figure out where you are now and where you want to be, we draw the roadmap to get you there. Okay? So, when we ask where are you now, we ask questions like, what is your income? What is your expenses? A lot of people just don't know where their money is going. They see the money come in on, say, a Wednesday and it's out broke again by Friday. So tracking your expenses is so important. Where are you currently located? Are you happy in your current role? Teaching is tough. You want to stay in teaching, or is there going to be a career transition for you? All those are going to impact whether you can buy a home in the next 12 months. And are you happy with life in general? It seems like such a silly question to ask as your financial planner, but it's just so important because what's the point of having, a few properties and millions of dollars if you're not personally happy? So, and whilst I'm not claiming to be a psychologist or anything like that, it is an important part. We do believe in having a healthy, balanced lifestyle and making sure that you're happy. That's really important to us. So where do you want to be? What do you truly want? Okay. Most people don't know what they truly want. They've never sat down and figured out what do they want. So we'll go through that process. Where do you want to buy your first home? Again, very important as well. What's the lifestyle you want to live? How many hours do you want to work? What does career success mean to you? And who do you want to help? So one of the things we'll talk about over the long term, after you buy your first home, is I'm a big believer in giving back. And so we always say there's 3 levels of wealth. We want to build wealth for yourself, wealth for your family, and then wealth for the community or the world around you, okay? That's long-term thinking. That's something that we won't go in a lot more detail in this presentation, but that's part of the ongoing journey at Master Your Money Now, is once you get your finances sorted and once you get your family's finances sorted, we want to think real big picture and make a real financial impact to causes that you are passionate about. So, something, again, long-term, something to think about in the future. And then thirdly, how are you going to get there? What do you need to do in order to achieve your dream lifestyle? What do you need to do? And often you actually don't need as much as you realize. That's probably the key in that. You don't actually need that much, usually you don't need that much to achieve the dream lifestyle that you want to achieve. How many hours do you have to work for and how long? What do you have to study? What do you have to give up? These are all questions when we ask you how you're going to get from point A, where you are now, to point B, as to where you want to be. Okay? So where are you now? Let's mention that in a bit more detail. We know that when it comes to income, teachers earn a good income, but usually it's capped at that 10-year mark where they can't really go much higher, which is really unfortunate. Yes, there's positions of leaderships and becoming principals or some sort of senior leadership position. They're definitely options. But if you want to stay as a teacher, then you are capped on that top limit, which is something you just got to be mindful of when planning your future income. We generally find that teachers aren't flashy. So, most teachers don't have, the Ferraris or the Porsches or the $2,000 suits or anything like that. So that's a good thing. But we do find that teachers are often carrying a lot of personal debt through what I refer to as impulse buying. So it might be a brand new car or and a car loan associated with that, or, a maxed out credit card from being on holidays and things like that. Whatever it is, if you are carrying personal debts, look, not to worry, let's talk about it, but that's something that we've got to manage and deal with before we can discuss saving for your first home. But that's something we can work through together, all right? Because I don't want you to do that process yourself, okay? So if you are in that situation, don't worry, don't panic, book yourself in for a discovery session, which I'll talk about at the end of this presentation, and then we can go through that, what we can do about it, okay? Budgeting and expenses. What do we find most about teachers? First thing I'll say is that your holidays are expensive. Why? Because unfortunately, you can only go on holidays during peak hour times and so your holidays are generally twice as expensive as certainly, say, mine, for example, because I go during off-peak, during the school terms, along with my wife who's a nurse, and everything's a lot cheaper. So sadly, you don't have much luck there because your holidays are generally more expensive. We know that through 3 or 4 years of education, that you're going to have some help or HECS debts, depends when you graduated. And that's something we've got to manage as well, because that does have an impact on your ability to borrow for your first home. And then we find, you're either renting, which is obviously an expense that we need to manage. It's harder to save whilst you are renting, or you're living out of home and just want to get out of your parents' house as soon as possible because you're a full-grown adult and you don't want to be treated like a child. So we help both in those situations we can work around, okay? And savings. What we generally find is that teachers have generally got a small pool of savings. Again, mainly because they're not flashy, but we generally find teachers do have some sort of savings. It might be $5 grand or 10 grand, maybe even $20,000, but that's it, that's all they've got. And they still struggle to save enough to buy for their first home. So That's what we generally find with teachers. Obviously, every situation is different, and your situation may not reflect what's on the screen here, but this is what we generally find with teachers. Okay. Where are you going to be? Here's a few questions that you want to ask yourself. Okay. What sort of house do you want? When you're talking about your first home, what sort of house do you want? Where do you want to live? Now, that's really important because it's only a 12-month commitment. See, I'm going to put it out there and say your first home is not going to be your dream home. Okay? So I don't think you're going to buy the couple $1 million mansion in Toorak or in a Sydney and off Circular Quay or that's not going to how it work. Your first home is a stepping stone. And you only have to live there for 12 months. The reason we say that is because most of the grants, vary from state to state, but most of the grants require you to stay in your own home for 12 months. If you move out of your own home within 12 months or convert it into an investment property, you've got to repay all the grants back, which we don't want. But if you're willing to commit to that area for 12 months, you're all good, okay? Buying or building, look, there's advantages and disadvantages to buying or building, and really depends on your situation as well, something we can talk about in a bit more detail. And whether you want to live by yourself or with flatmates, again, there's a few considerations we've got to be mindful of there, but just have a really clear idea of where you want to be, and then we can discuss that in more detail. Alrighty, so how are we going to get you there? So there's a few things that we've got to do. So the first thing is we've got to save the deposit. I'm going to show you a few tips and tricks on how you can do that easily and quickly. Get the grant. There's so many good grants out there that in each state that incentivize you to get into the housing market. Let's take advantage of that and let's discuss a few of those. Once you get the grants, you can go and find the home that you want, okay? Apply for the loan, we can look after that for you, and then move in. Seems straightforward, doesn't it? If only it was that simple, okay? So let's go through a few of these steps in this presentation. Because here's the thing, when it comes to saving for a deposit, there is one big mistake that teachers are making when it comes to saving for your first home, and is literally costing you as a teacher thousands of dollars, okay? And that mistake is that you're not using your super to save for your first home. Did you know that? Did you know you can use your super to save for your first home? It's true, okay? Let me show you how it works. So, when it comes to the first home super saver scheme, that's what it's called. You can put in up to $30,000 into your super account as additional contributions and pull those funds out again for your house deposit. Okay, that's the headline. Now, when I say additional, that's really important because your employer is should be by law putting in 9.5% of your salary into your super accounts. You cannot access those funds for your first home. Those funds have to be set aside for your retirement. However, if you were to put additional funds into your super, you can use those funds to save for your first home. And how it works is, from a tax perspective, is on the screen. So let's say you got a bonus or worked a bit overtime, tutoring, whatever it might be, and you earned $1,000 before tax. You put that into your super account, and any pre-tax contribution into your super account is taxed at 15% going in, okay? And then, so you pay tax then, and you pay tax again on the way out. That's at your marginal tax bracket, less 30%, okay? So in this case, $1,000 goes in before tax, you will have $805 for your first home. Now, I can hear what you're thinking already. Hang on, that doesn't sound like a good deal. How does that work? Why don't I just take it as salary? That's a great question. Let's discuss that in a bit more detail. And I'm just now the way to read this graph is actually from the bottom left-hand corner. That's where I'm going to start, where you've got $15,000 in the bank account, okay? So if you want to save up for a deposit, you've got the $15,000 that's saved in your bank account. Let's use that number as an example. So However, in order to save $15,000, you've already paid tax on that money, okay? And based on your income, that's going to be probably around the 34.5% marginal tax bracket. So in order to earn $15,000 after tax, you have to earn $22,900 before tax in order to generate $15,000 after tax. Okay, that's if you do it by your salary. That's the left-hand side of the chart. If you did it by the right-hand side of that chart, you paid a total of 19.5% in tax. So you paid 15% tax on the way in, and then 4.5% on the way out. That's your marginal tax bracket less 30%. So you're paying total of 19.5%, which means that you will have $18,435 for your deposit, an extra $3,435 for your first deposit. You haven't worked any harder. You haven't worked any harder. You've just worked smarter. That's it. You know, you already work hard enough. I get it. We want you to work smarter, not harder here. And this is a way you can get an extra nearly, in this particular example, which is not even using the full cap. This is just an example, but this is how you can save an extra $3,400 for your first home without working any extra. This is what my members do. This is what teachers that know about this are doing. Those who don't are paying thousands of dollars in extra tax when they don't need to. Okay? So when we're talking about your super, it does beg the question, well, what is in your super account? And I dare say that most 25 to 35-year-olds are not engaged with their super. Most people would say, so I use this analogy called what's in your flower pot. What do I mean by that? So let me tell you a quick story here. So my fiance at the time, she's now my wife, in her infinite wisdom, decided that she wanted to buy me a flower in a flower pot. Now, I have no idea what that flower was. All I knew that flower pot was green. And so forever that was known as the green flower pot. Okay? So, but even I know, I'm a terrible gardener, as you probably picked up, but even I know that doesn't matter what color your flower pot is. What actually matters is what's growing inside your flower pot. Okay? What is actually growing inside your super account? Okay? So what does that mean? What does that mean? So most people who can tell me who their super is with. Might be an Australian super, a Vic super, a bank fund, or whatever it might be. But most people cannot tell me what is inside their super account. What is it invested in? What are the fees? What sort of plan B or personal insurance cover do you have in place there? These are all the reasons that we need to be careful of this when looking at your super account. And what a great opportunity to get this all right in your 20s and 30s so you can get the long-term benefits of it and get this right when you're saving for your first home. Because here's the thing, you've got time, when it comes to your retirement, you've got time on your side. I always quote the rule of 30, which if you put an extra $30 a week into your super fund over a period of 30 years, only $30 a week, that's, a good dinner. It's not a huge amount, but $30 a week over 30 years in a high growth super account earning 10%, which is high but doable, you are going to have an extra $300,000 in your super account. $30 a week, 30 years, $300,000. Again, not working harder, just working that little bit smarter. And I'm sure if you ask your parents, I think a lot of them would say, I wish we did that when we were in our 20s and 30s to get those long-term benefits. I always ask the $2 million question as well. Would you rather have a $2 million property or $2 million in your super account? Now, what I generally find with most people is they say they want a $2 million property. I'll say, well, that's great, but what are you going to live on? See, I'd rather take the $2 million in my super account because I know at worst case scenario, I can rent the $2 million property and still, have good income to support me as my lifestyle and in retirement. So we're talking about all these super things, and super we know is so important, but most people are not engaged in their super accounts. And this is a great opportunity to engage with your super account as well. And plan B, certainly, protecting your income, that's really important as well. Just look at that as well. And also because, obviously I don't work for free, so if you do become a member of Master Your Money Now, and look, financial advice can be expensive, but the beauty of it is we can fund a portion, if not all, of your advice fees from your super accounts, okay? Again, this is something we can discuss in our 30-minute strategy session. You can book in complimentary, okay? And I hope you can see here, whilst we're talking about how you can save for your first home in the next 12 months, we look at the big picture. We look at your whole situation. We'll look at your super, we'll look at your insurances, we'll look at your cash flow, we'll look at your retirement plans. So if you just go to a traditional mortgage broker, they're just going to tell you about a mortgage. If you don't have a deposit saved up, which is what you may be struggling with, which is the reason why you're watching this video, then the mortgage broker can't really help you. I'm a mortgage broker as well as a financial planner, so I get that. But this is where at Master Your Money Now, we look at the bigger picture, and how is this one goal going to, be the stepping stone to even bigger and greater things? Okay. Now, let's talk quickly about the grants that are available for first home buyers, okay? Now, note, they're going to vary from state to state and subject to change, obviously, but this is the Victorian example, okay? So for a first home owner's grant, you can, if you're buying or building a new home valued up to $750,000, okay? So you've never lived, so no one else has lived in that property when I say buying a new home. If you're in a regional area, the government's going to give you 20 grand towards your house deposit, which is pretty good. If you're in a metropolitan area, so inner city Melbourne, you'll receive $10,000. Okay, so there's a little bit extra there for you. And stamp duty concession. So no stamp duty is payable on any new or established home. So whether you buy or build, it doesn't matter. Brought for $600,000 or less. Now, usually that is $31,070. So that's a pretty generous incentive for you to get into your own home. 30 grand you don't have to pay. And there's no stamp duty when building a principal residence, regardless of whether it's your first home, second home, or so forth. So when we combine these grants with your super savings, it is you can see here, hang on, we're starting to build a deposit so you can be in your own home within the next 12 months, okay? So, now, the next slide's actually talking about how much a deposit that you actually need. But before we get into that, some of you may have seen on the news and part of the election campaign that was had a while ago now, but ScoMo, Scott Morrison, said for those who have saved for their first home don't have to pay lender's mortgage insurance. Okay, so what is lender's mortgage insurance? Let me go forward a slide and I'll come back. So lender's mortgage insurance is if you have a deposit less than 20% of the value of your home, you have to pay lender's mortgage insurance. That protects the bank, not you, in the event that you aren't able to make the repayments, okay? So this is all about helping the banks. It doesn't help you at all, okay? So, and that in this example on the screen here, if you have a 5% deposit and you wanted to buy, which is 20 grand, and you wanted to buy a $400,000 property, you will pay lender's mortgage insurance of $13,984 in this example, okay? So, however, Scott Morrison has come out and said, well, first home buyers, as part of, if you re-elect us, which we did, so you don't have to pay lender's mortgage insurance for your first home. Hey, $13,000 is saved. That sounds fantastic, doesn't it? There is a catch. So firstly, it does depend on your income. So if you're earning more than 125 grand or as a couple earning above 200 grand, you won't be eligible for this straight away. So for most of you, I don't think that will be an issue. But the biggest catch in this is if there's only 10,000 of these grants available out there, okay, 10,000, I think it's 20,000 a year. That hasn't been even that hasn't been confirmed, but it's 10,000 of these are available. And when we take into account there was 106,000 first home buyers in 2018, there's a bit of a shortfall here. You can see the numbers don't quite add up. So this is, again, something that we've got to be mindful of, and again, something we can help you with the process. There is still a lot of information that needs to be released on this as I'm recording this, but again, something as a part of this process we can definitely help you with. Okay. So how much deposit do I actually need? I would generally say, if nothing wrong with a 5% deposit, if you've got to pay lender's mortgage insurance, it's there. Why I don't recommend the bank of mum and dad. I've seen, again, I know people will disagree with this, but I believe that, I want you to do this yourself, okay? And I've seen a lot of, breakdowns and guilt trips, when parents are providing their equity to, or some money to fund the deposit for your first home, okay? And also the banks have now clued up on this, and Royal Commission as well. And as a result, this is actually getting harder and harder. Not impossible, but getting harder and harder. So I want you to buy your first home in the next 12 months. I don't want you to have assistance from your parents. I want you to be standing on your own 2 feet and you save your first home in the next 12 months, okay? And, make things easier for yourself and everyone involved, I would strongly encourage that you save up this deposit yourself, okay? So again, so the minimum deposit is 5%. That's the minimum that you need, okay? If you have a 20% deposit, you pay no lender's mortgage insurance. Let's put aside Scott Morrison schemes for a moment, okay? So that's generally the rules. 5% with lender's mortgage insurance, up to, or more than that, or up to 20%, and you don't have to pay lender's mortgage insurance, okay? But did you know there are special deals exclusively available for teachers where lender's mortgage insurance can be waived if you have a 15% deposit, okay? So we've partnered up, because again, as mortgage brokers, we look at the whole list of options out there, and we are aware of one lender, at least one lender, where you only need a 15% deposit in order to avoid lender's mortgage insurance. So if we go back to the example on the previous slide, if you only need $60,000 for a $400,000 property, you need $60,000. If you've got a $20,000 grant from the government, you only need $40,000 plus costs in order to save that lender's mortgage insurance of about $14,000. Something to think about, okay? So just something we can discuss, depends on your situation, but that is definitely a very juicy carrot to consider. Okay? So let's quickly talk about the loan process. The loan process you'll go through in 12 months' time. Here's some common questions asked about teachers. Does a credit card actually help my house deposit? And the answer is sometimes yes, sometimes no. Because a credit card does help you get a credit check or a credit reference, a credit history, sorry. And so that might help you when it comes to the loan application process. And sometimes there's some other deals you can take advantage of. But generally, I would say the hassle's not worth the cost. And particularly if you're someone who struggles to manage credit cards, like you've got some significant credit card debt, then I would probably suggest that a credit card's not going to be a good option for you. Should I get an offset or redraw facility? Again, depends on your situation. Should I go fixed or variable? Another good question, something we can discuss. Which bank should I go with? I would say whatever bank you go with, don't go with the one you grew up with, all right? That doesn't give you an advantage. Look at the whole suite of options. There's about 45 different lenders out there that can give you, that you can consider. And like I said, there's one out there that have got some really good deals for teachers. So don't just go into the bank you've banked with your childhood because your parents set up an account for you when you're 6 months old, like my parents did. Look at the full suite of options. How does my Help HECS debt impact my application? It will have an impact. It will reduce the amount you can borrow. But again, depends on your personal circumstances. That's something we can discuss in due course. And how do I do all the paperwork? Again, you can do all this yourself. Nothing here you can do yourself. I'm sure you can, but the question is, do you want to? After all the paperwork you do through your work and reports and lesson plans and so forth, I don't think you want to be doing more paperwork. That's where my role comes in, to do a lot of this for you and make your job as easy as possible. Okay? Here's some cautions and costly mistakes, okay, that teachers make. They just go for the cheaper rate. Just because it's a cheaper rate when you're applying for your mortgage doesn't make it better, okay? They go to the bank that we've been with since they were a kid with a Dollarmite account, okay? We've discussed that. Look at other options, all right? They don't use their super to save for their first home. They speak to the wrong people. This is a big one, Yeah, you can go into your bank, you can get a loan, but you may not get the best loan, okay? Because they're just going to say whatever bank you've been into, okay? Speaking with a mortgage broker and a financial planner that can look at the whole suite of options can make a huge difference for your situation. They don't look at the bigger picture. Again, that's where my role comes in. Your first home is not the end goal. It's a starting point, okay? So let's, we'll get you in your first home, absolutely. But then let's talk about the next home and the next home, the next home after that. And, building wealth inside super, outside of super, and also that plan B, personal insurance cover. That's such an important part of this process. And that's something we can discuss as well. They don't get advice. I'll mention that in a moment, and they try and do it all themselves. All right, let's talk about those two for a moment. Let me ask you a question. Should I DIY my education? And I was talking to a couple of teachers about this because I know there's a bit of a rise in parents taking out their kids and teaching them themselves, homeschooling. And I was thinking, speaking to the teachers and going, well, hang on, is that actually going to be better? And they said, look, there are some limited circumstances where it does, but mostly, I'm sure you agree with this. If you don't, let me know. I'm open to suggestions here that it's probably going to be detrimental to that child if they are homeschooled. Because first and foremost, they're going to miss out on a lot of social skills. Social skills they're going to pick up, interacting with their peers and with other teachers and other people, that is going to be a big, they're going to miss out on that. They're going to miss out on a round of curriculum and learning about all these different things that you do as a teacher. But most importantly, the thing that probably irks me the most is, isn't it quite silly that, say for example, I don't have kids at the moment, but if I had children and I could say that I could do a better job teaching my kids than you can as a teacher when you've got 4 years experience and plenty of other practical years of experience as well, that's a bit silly for me to say, isn't it? If I said that I could do a better job than you without any training or experience. I think that's ridiculous, just personally. So I would say that for the majority of cases that DIYing your education does not lead to a good outcome in comparison to going through the school system, okay? And letting you, the teacher, the expert in managing their education, okay? And the same reason that I believe that DIYing your education is not a good idea, the same reason I believe that DIYing your finances is not a good idea as well either. Because again, flipping the roles around, myself and other financial planners, we've had, years of experience, firstly with the training through university and whatnot, but also, years of experience helping people, in my case, helping everyday teachers and nurses with this stuff this is, research and time that I've spent that you haven't, and nothing wrong with it. I'm trying to imply that there's reasons for it, but, this is not, you're not an expert in this field. So, but yet there's such a mindset out there that you've got to, do it yourself, tread your own path when it comes to your finances. And we're seeing the results of that mindset. We're seeing teachers who have got high personal debt, high credit card debt, and are able to save for their first home and getting further and further behind and have nothing to show financially for their hard works and efforts. So I would argue that just as I don't agree that DIY in your education is a bad idea, I believe that DIY in your finances is also a bad idea as well. Here's a great quote that I want you to think about truly. If information is all that you need, then we would all be billionaires with six-pack abs. Someone very smart to me said that, and it is so true, because here's the thing. Most people think, particularly teachers, most people think all that they need is more information. I'm going to argue that is so far from the truth. You don't need more information. You've got all the information you need through this presentation to buy your first home. And if you don't feel like you got the information, go onto Google. It's got more information that you need for any single topic that you like. We live in the information age. All the information is out there. So why aren't we getting results? Why have we still got people that are not physically healthy or struggling mentally or struggling with their finances when all the information is out there? Because information is not what you need. Okay? If anything, you need less information. What you need is a person, like someone to take you by the hand and show you step by step what you should be doing in a personalized plan. Okay? You don't need more information. You've got right now, I would say you've got all the information you need to buy your first home. You don't need more information. You need someone to come alongside you to help you get this all done and make it easier for you. Because here's what I propose to you. You have a choice. You've got two options here. Firstly, you can DIY. You can do it yourself, okay? You can research all the options yourself. You can go into Google and do all the research and do all that kind of thing yourself if you want to. You can speak to your super provider and research all the super options out there and find the best one that suits you. You can sort out all the paperwork with your payroll. You can speak to your bank, and I wish you good luck with that if you go down that path. You can get your plan B in place by yourself and read through all the PDSs. They're about 150 pages long. Good luck with that. You can talk to multiple people, and have so many people to deal with, and you can do this all on your school holidays. I'm going to put it out there that most teachers want to have a life, and this doesn't seem like much of a life. And that's why I propose a second option, the GIDFY option, get it done for you, okay? One trusted source of contact, okay? So not multiple people, you just got to deal with one that specializes in first home for teachers, okay? This is what we do. This is our bread and butter. We can meet after school or on your school holidays, okay? My most popular time slots are 5 o'clock and 6 o'clock, okay? I'm more than happy to meet you on those times. And again, we can do this via in our Geelong office, or we can do it via video technology, okay? So you don't even need to leave school or do it at home. Don't even need to come into town or anything like that. We'll do all the paperwork for you. I know this is a big bugbear with people, but we want to make it as simple as possible for you. So even, for example, if we do select a new super account for you, I'll have a letter prepared for your payroll saying, "Dear member, my member has a new super account, XYZ Super Funds. Here are the details." You just got to give that letter to your employer and away you go. All right, that's how easy it is. We'll do the research on your behalf, okay? That's what we do. We'll speak on your behalf. So, if something goes wrong from an implementation perspective, or, the banks are not, are not accepting your loan for whatever reason, we will speak on your behalf, okay? So whilst you're doing your job as a teacher, we'll be on the phone sorting out your finances on your behalf, okay? We will reduce your stress and hassle. And, when someone told me the other day that 35% of teachers have reached out for professional help in the last 12 months to deal with stress and anxiety, okay? Doing this process, getting someone else on board is going to reduce your stress with this process, okay? We're here to delegate. Delegate, things that you don't want to do. This is what we're here for. Spend more time enjoying life and move into your home within the next 12 months, okay? Because I want you to take a moment. Imagine that you are getting the keys to your first home 12 months from now. How do you feel? How would that feel, that all that hard work and effort, not just for the 12 months, but all through your school and education and years of uni, getting that first job and then, building up your career, all that hard work that you've done, and you'll be able to reward yourself with your own home, okay? How would that feel? And most importantly, what would be next for you, okay? That's the exciting part. This is, again, the first step, not the final step. We can discuss that in a moment. As I've indicated through this presentation, you are invited to a 30-minute complimentary money strategy session with myself or one of my team. We'll get on the phone and talk to you one-on-one for 30 minutes to answer any questions and concerns you may have. Because, hey, I get it, this is a brand new concept, how can I trust you? What do you do? All that kind of stuff. Let's get on the phone. Let's answer those questions that you have. I'm sure you've got plenty. That's okay. That's normal. Let's talk it through. Let's understand what you want. Okay. It's not about what we want. It's about what you want. Okay. And let's see if we are a good fit. Because here's the thing. We don't work with everyone. Okay. We don't work with people who are not coachable. Okay. Which I don't find a lot with teachers, because teachers teach and generally they're open to other people teaching them. Not all the time, but that is what I generally find. So if you're not someone that's teachable, again, firstly, I question why you're a teacher, but secondly, we're just not going to work with you, because no matter what we teach, you're not going to implement, so you're wasting your time and you're wasting my time as well. I don't want to do that. We don't work with people who once off, set and forget, okay? We don't believe in once-off advice. It doesn't work, because you go 2 to 3 years down the track, or we find that most people who get once-off advice are in the same position, if not worse, than where they started 2 to 3 years ago. We're looking for work with people who want an ongoing relationship over the next 12, 24 months, 3 years, 5 years, 10 years, and beyond. We're looking for long-term relationship, okay? We want to work together as you go through your journey, okay? Have no accountability and do not appreciate the value of advice. Again, teachers value advice. They give advice on a regular basis. So I would generally find that most teachers do appreciate the value of that advice. Who do we work with? Our ideal members are everyday people, teachers, nurses, tradies. That's who we work with. We don't work with CEOs, sports stars, movie stars, that top 1%. That's not what we do. If you are one, hey, more than happy to have a chat, but that's not what we regularly do. We help primarily teachers and nurses with their finances. We work with people who are coachable and are open to learning, okay? They acknowledge that they do not know everything. That's such a key thing, Admitting that you don't. The best clients I have are the ones who say, I don't know what I'm doing, help me. That's exactly it. Because, hey, to give you an example of that very quickly, I'm not good with physical with physical health, okay? I need a personal trainer or a group sessions to ensure that I keep reasonably fit. I'm still working on it, okay? But I need that support, because I can't do that myself. I don't know this myself, okay? And so the same reason that I get a personal trainer, and I'm sure some of you do as well, the same reason I suggest you need a personal trainer for your finances. That's where my role comes in. Again, we're looking for people who want a long-term partnership and enjoy the journey together, okay? Are aspirational. That's huge. Again, your first home's not your final step. It's the first step, not the last step. There's always another level. We talk about, I mentioned this before, the 3 levels of wealth. Building wealth for you, building wealth for your family, building wealth for the community or world around you, okay? We'll take you through that journey. We'll show you some of the things that, if I said those things, what you could do in 10 years' time now, you wouldn't believe me. But these things are achievable if you get the right processes in place. We'll refer their friends and family. We offer generous discounts for if you do refer your friends, family, and work colleagues to us and they become a member as well. Who want to be fun? We want to deal with fun people. I don't want to deal with boring people. What's the fun in that? Life's too short. I want you to have fun, and I hope you want to have fun as well. And look, finances can be a dry topic. I get it, but we want to make this as fun as possible for you as we can, and live a life that's bigger than themselves. I really don't understand, like, if you've got $10 million in your bank account, so what? Like, seriously, so what? Why are you not using that money to, help, reduce childhood cancer or AIDS or poverty or whatever cause that might be? We want you to live a life that's better than yourself. There's no point of building wealth just for, to store it yourselves. We want to work with generous people who want to build wealth, in the long term, build wealth for those around them. Okay? Now, here's the thing. I want to stress this as we're just coming this to a close. It doesn't matter where you are now, okay? If you've got 30 grand in the bank account or 50 or 100 grand in the bank accounts now, fantastic. We can work with you. If you've got a personal loan of 20 grand, a maxed out credit card of 10 grand, not as fantastic, but still, we can definitely help you. We want to help you get out of that debt, okay? It doesn't matter where you are now. What matters is where you want to be and whether you're willing to do what it takes to get there. Okay, that's the difference. If you know where you want to go and you're willing to do what it takes to get there, then I want you to book in for your complimentary 30-minute money strategy session now. All you need to do, there should be a link around this screen somewhere, but all I want you to do is go to masteryourmoneynow.com.au/get started and to book in your complimentary 30-minute session now where we can talk about what is your opportunities for you. Okay? I'm looking forward. Thank you for listening to this presentation. My name's Chris Carlin from Master Your Money Now. Looking forward to speak to you soon. Booking your strategy sessions now.